Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. The wild activity in the market continues today, Wednesday, the 10th of August, 2022. Good morning. Futures were green to start today. Maybe this thing got leaked, I don't know. And then went greener with the CPI release, which was in line to slightly better than expected. Core CPI did not go down on a year-over-year basis, coming in at 5.9 versus 6.1 expected, but that 5.9 is the same number as last year at the same time. So that I would think would be a little bit of a concern, but nevertheless, the knee-jerk reaction, dollar down, rates down, gold up, big bid to tech, profitable, unprofitable, you name it, secular growth, whatever, big bid out there in tech land, which is interesting. Obviously, the thought is you got a less hawkish, an easier Fed going forward than you did before this print. Fed fund futures now discounting a 62% chance of a 50 bip rate hike in September. Prior thought was a 75. So easier Fed is the message from the market right now. We're going to get a big gap up on the open. Be very interesting to see if take a look at that 415 level on the SPYs. That's an important level on my technical work. So if we stay above there, that would be pretty constructive for the near term. If that just fades and we get back down below that 415, that probably means continuation of the recent correction would be on the offing. Semis bid pretty well out there, so that's in my mind an opportunity near term if you want to decrease exposure to the space. You feel like you got trapped and try to play it. Certainly not a time to add. Trim or go short would be the thought in semi-land in general. Part of the transcript on that Micron second pre-announcement here in recent months was they are starting to see inventory problems spread to other verticals, including industrial and automotive. So that's a no-touch land for me. We may actually even trim some of the small holdings that we do have, just knowing we can get them a lot cheaper in the next month. So there's that. The trade desk, TTD, that company is back. That's been just such an amazing growth story. We've had that name in the past, done really well with it. The language from the CEO on the call, just in terms of customer engagement and further engagement forward heading into 2023 is very constructive. It seems like all systems are re-go there at Trade Desk, so that's interesting. That deserves the pop. That's probably a long. And then we look at CyberArk, CYBR. Cybersecurity stock reported, one of the first ones in the kind of the next gen cybersecurity. Good numbers, nothing inline report, inline guide, stock up pretty good though. It is one of the cheaper ones out there on a price to sales, though unprofitable. You got to look at like Palo Alto and Fortinet for the profitable ones. And Fortinet did not have a good quarter, as you recall, but Cyber giving a lift to the other cybersecurity names out there, so that's interesting. And then the dollar came off pretty good on this print. That's significant. So it was off. I saw it off a point on that UUP. So that's obviously very constructive for emerging markets. Very constructive for exporters in the U.S. So see if that trend continues. That would be real nice. Gold bid as well. Go sad gold. That's all I got. Good luck out there. Remember that 415 level on the SPY. Keep an eye on that, and good luck out there.
disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefor. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.